Salam everybody, this is Investor Sheikh back at it again with another video. And today's halal stock pick of the week is Teladoc Health, ticker symbol TDOC. Stock price is at $147.42. And the key stats are: it has a $24 billion market cap, no dividend, the 52-week low is 120.67, and the high is $308. So based on where the current price is right now, it's a lot closer to the 52-week low. PE ratio is negative 31.61, and the earnings per share is negative $5.87. Now, I'm not too sure about this PE ratio being negative, but we'll double check. So, as you may know, I've covered this stock multiple times in my channel. When I first talked about this stock, it was around late 2020 when the stock price was around $190. And since then, the stock price shot up to as high as $300 during February, and around January and February, when a lot of growth stocks were at their highest price levels. And at that point, that's when a lot of people knew that these growth stocks were overvalued. So we saw a lot of them drop around mid-February. So for Teladoc, it has really taken a beating throughout the year, as it is little around 50% from its all-time high. It is down 50% from its all-time high. But obviously, if you bought at this point, you would already be holding the bag right now. So I believe that this Teladoc stock at around 130, 140, 150 would actually be a good price to grab shares at. However, this is not financial advice. I do have a position in this stock, and with the stock price dwindling throughout the year, I took that opportunity to double down on my investment and dollar cost average so I could lower my average, because I really believe in this company in the long term. I truly believe that telehealth has long-term potential. It's not just a temporary thing with this pandemic that we've been having. I think this will be here to stay, especially with other competitors such as One Life Medical, or One Medical, Hims and Hers Health, and Clover Health. There's a lot of competition, so I do believe this will be a very profitable industry moving forward. So let's check out Teladoc stock on MuslimExchange.com, which is one of the halal stock screeners that gives you the information for free, unlike Zoya and Islamically. So you can actually get some detailed halal analysis on your stocks on this website. I did make a video on this website, so you can take a look at it. So it is Sharia compliant. And the company profile, or a brief description of the company, is: Teladoc Health Inc. provides virtual healthcare services. The company provides virtual access to care with a portfolio of services and solutions, which include various medical subspecialties, from non-urgent episodic needs such as flu and upper respiratory infections to chronic complicated medical conditions such as cancer and congestive heart failure. It provides virtual healthcare services on a business-to-business basis to its clients and provides services to consumers directly and through channel partners. The company's consumer brands, including Teladoc, Advanced Medical, Best Doctors, Better Health, and Healthiest You, provides access to advice and resolution to a range of healthcare needs. Its technology enables customers to manage their own electronic medical records. It also provides access to a message center, provider center, image upload capability, and enable real-time sharing capabilities with providers that includes visit scheduling. So in a way, this company is really disrupting the traditional healthcare field where you would go to a physical hospital, meet with a doctor face to face, where they would actually keep your records at the hospital, when really you can keep those records for yourself and interact with doctors through video chat without having to go to the hospital. You can do all this in the comfort of your own home, or if you're traveling, you can do your consultations, your doctor visits. Even if you're traveling all over the world, you can still have these services on your smartphone and your computer. So they do have a user interface, such as an app for your phone, and their website, which provides a lot of resources that can really question whether you want to go back to the hospital. So continuing with this halal screener, it does pass the business screen, as it appears to pass the Sharia business screen. For the financials, it passes on the debt, as Teladoc's debt consists of 8% when compared to its assets. And then when you compare the debt to the market cap, it's 5.82%, which is well below the threshold for a lot of these halal stocks. And of course, many companies do have debt in order to operate. So as long as the debt does not consist of a significant portion of their revenue or their market cap, it really isn't that much of a concern. So yes, so in conclusion, this screener considers Teladoc to be a halal stock. So let's dive deeper into the stock price here. So looking at the 1-year chart, you do see that there is a long-term decline that we're seeing throughout 2021. The stock has been trading sideways around the 140, 130 range. And until recently, we started to see the stock price increase as it broke 150. And right now it's currently at 147. Again, I do consider Teladoc to be a 5 to 10-year hold, given the growth of the telehealth industry. So, although seeing these stocks at this price level may seem concerning, that's more of the short term. So, if you're really a short term trader, I wouldn't really recommend this stock. This is more of a long-term hold. So I'm not really too concerned about where the stock price is at now. I do consider this to be at a pretty good discount compared to where it was last year, when it was at 190, 200. So again, the current stock price is closer to the 52-week low. So on Yahoo, they do not have a PE ratio, so I believe that number on Zoya is inaccurate. And the company has a $24 billion market cap. And looking at the 1-year target, the analysts are saying that the 1-year price target is $172, meaning that if you were to purchase this stock today, you would be getting it at a good price compared to, well, based on what the analysts are saying. So looking at the earnings, okay, so let's take a look at how the company has been performing. So as you see, Teladoc has had year after year revenue growth, which is a good thing. One thing to look out for is the negative earnings that you're seeing in 4 consecutive years, with 2020 seeing a huge drop in earnings, which could play a factor in the decline of the stock price. And then looking at the quarterly growth, you do see quarter after quarter growth in the revenue, but we're still seeing negative earnings. However, we are seeing the earnings increase quarter after quarter. Although it's still negative, the numbers are getting smaller for the earnings, which could be a good signing. Which could be a good sign. Uh, Perhaps they could have positive earnings moving forward. If not at 2020, late 2022, 2023 at the earliest. But that's just my opinion. And then let's take a look at what the analysts are saying. So the average price target was $172. So based on the analysts and what they're saying, the stock is a buy with price targets as low as 125 and as high as $260. And the average is at $172. So this analyst right here is very bullish, considering that the stock price is pretty much half of his price target of 260. So that's interesting to look at. So let's take a look at the financials here. So right now this company is operating at a negative net income, which again is very common for growth stocks, because although Teladoc has a lot of potential in the long term, in the short term we are seeing we're not seeing any profitability right now. So if you're trading the stock for the short term, you may not be satisfied with the day-to-day activity of the stock. So again, given the potential of the telemedicine industry, I do believe Teladoc will be profitable within the next 5 to 10 years. So right now, although they're operating at a negative net income, they do have the potential to achieve profitability. And looking at the balance sheet, the company has $17 billion in assets, and they have $1.8 billion in liabilities. So look at that. Look at the difference here. 17 billion in assets compared to 1.8 billion in liabilities. The assets greatly outnumber the liabilities, which is a really good sign for this company. Now, a lot of stocks that I showed you earlier, the assets were a lot closer to the liabilities in terms of their amount, but to see Teladoc have significantly larger assets is a really good sign. So, all in all, I am bullish on Teladoc stock, ticker symbol TDOC. I do own a position on this stock, and I do believe it has the potential to double or even triple within the next 10 years. As always, I'm not a financial advisor, so please don't buy Teladoc stock simply because I'm talking about it. This video is for entertainment and educational purposes only. Please do your own research before considering purchasing this stock. This is Investor Shake, checking out.